Hi, today we look at the stock screener and backtesting software I personally use. For those new to the channel, please consider subscribing, and for those that find value, please hit the like button. I often get asked questions regarding my hybrid approach to the market, which combines technical and fundamental analysis. For fundamentals, I use Stockopedia, and for technical analysis, I use MarketInOut, both with discounted links below. Having covered Stockopedia in a previous video, today we take a look at the power of MarketInOut. The more mechanical and repeatable a system, the easier it is to stay consistent. But perhaps more importantly, the easier it is to backtest a system's viability through objective data. MarketInOut has been my technical software choice for many years, providing complex screening and backtesting options, along with the many studies often discussed. Here's a quick example of a strategy I'm currently researching. It's a mean reversion strategy based on the findings of Larry Connors. The concept follows a broader trend but aims to enter a position on a pullback. Connor suggests a 2-period RSI, and in theory he says an RSI reading of below 10 indicates an oversold price and therefore a buying opportunity. He also says the price must be above the 200-day moving average. I put these simple criteria into the backtest module, with some slight tweaks, selecting long positions on stocks included in the Russell 3000 index. I used stocks with a 2-period RSI below 8, and exited positions when price crossed back above the 10-day exponential moving average. In terms of position management on the initial backtest, I did not include any stop loss. I used a starting balance of $100,000 and risked a maximum 5% of capital with a portfolio size of no more than 20 positions. We add commission and spread costs here and then run the backtest. I used the last 10 years to see how the strategy fared. We can see the annual and monthly returns with the equity curve above. Notice how in 2020 the strategy performed very well due to many stocks becoming oversold during the pandemic, most of which recovered strongly soon after. Overall, the strategy saw a compounded return of over $14 million, equating to growth of over 14,000% from a total of over 5,000 trades. The maximum drawdown was 41%, but the average annual compounded return for the 10 years was a very respectable 62%. The win rate was 67%, and the average hold time was 10 days. The purpose of this example, however, is not to provide a complete strategy, but rather show how backtesting an idea can determine viability, whilst also providing a foundation for further research. This example is just that, a theoretical application of a strategy that is worth studying further. Another example can be seen here, this time a simple rules-based strategy for Bitcoin. The rules are simple. Buy when the MACD crosses above the signal line, ensuring price is above the 100-day exponential moving average, and sell when the MACD crosses below the signal line. We set the parameters here, using a $10,000 initial investment, holding just the one position and adding the trade costs. We run the backtest from January 2015 to February 2021. The results are generated, and we see a perfectly viable system to trade Bitcoin. The drawdowns are almost eliminated in comparison to the equity profile of a buy and hold Bitcoin strategy, which saw a drawdown of 82% at one point. I use a similar, slightly more complex strategy, which can be seen in a previous video. The software allows us to drill down into each trade made through the backtest, and by clicking on the selection we are presented with the chart. We can see the entry, the MACD cross, and the exit when the MACD crossed back down. The backtest and screener can combine virtually all technical combinations available, using hourly, daily, weekly, and monthly timeframes. If you love data, testing ideas and theories like a quant, then I highly recommend the service. Qualifying positions can also be sent directly to you if you choose. The website Investopedia summarizes the importance of backtesting best by quoting, "Backtesting is one of the most important aspects of developing a trading system. If created and interpreted properly, it can help traders optimize and improve their strategies, find any technical or theoretical flaws, as well as gain confidence in their strategy before applying it to the real-world markets. Thanks for watching, and let us know your thoughts below.